And we're beginning the broadcast by taking a look at what's happening in markets by speaking with author and analyst Elaine Kub. The USDA's final estimates of U.S. production in 2020 will be released next month. And as we approach the final weeks of the year, we spoke with Elaine about what we can expect in that report, year-end price movements, and the role a lower dollar is playing in the markets.
Yeah, we do see the US dollar index as low as it has been since 2018 when the Fed stopped that last round of quantitative easing. It's now, the number is about 90, so that's pretty low, and it continues to move lower day by day. The reasons for that are, of course, the Fed pumping in lots of liquidity to the market system because they really don't want to stress the financial markets, along with all the other stress that's going on in the economy. So that all makes sense. And the thing is, that's likely to continue. I mean, I believe the idea of the dollar staying lower for longer is something we can really count on from the Federal Reserve. Now, what happens when you have a lower dollar is that's actually bullish to grain prices, because if the price tag in dollar terms is lower, then foreign buyers can afford to pay higher price tags for US grains. So having this lower dollar has been a bullish influence, and we've seen it in the past couple of months. You see a really clear upward trend in the grains while you have a simultaneous downward trend in the dollar. And that's not just a coincidence. I mean, that is part of the mechanism of how grain prices are set.
And Elaine, I think it's important that we look ahead to 2021 because as a difficult year as 2020 was, we could be seeing some changes because there's the COVID vaccine that should help usher in a return to normalcy. And we also have a new administration in the White House too. What does that mean for the dollar and the price outlook for various commodities?
You're right to mention the new administration. So we've got Janet Yellen coming in as Treasury Secretary. And that will mean, since the market is pretty familiar with Janet Yellen's bullishness and her accommodative stance towards monetary policy, and now she's coming in to make fiscal policy, which will also be accommodative. So this is just an absence of a threat to the dollar. To me, this suggests that we should see that dollar remain lower for longer, and we don't have a big threat of a big pop in the dollar that would change something for the grains. The grains should be able to maintain the price levels where they have now based on the dollar.
I'd also like to get your thoughts on the potential hire of Tom Vilsack as Secretary of Ag. Joe Biden tapping him for the role that he held for 8 years under Barack Obama. So assuming Vilsack is confirmed, what are some things we can expect in ag in the short and long term? Will this be a big shift from what we've seen for the past 4 years with Sonny Perdue?
You know, I think, again, this is an absence of a concern. It's more of a status quo. There would have been appointees that could have been made where you would start to wonder, is there going to be a major shift in the crop insurance program or anything like that? But I think with this appointment, Tom Vilsack, I don't think we should be expecting any major surprises or any changes in the way that the grain markets work or grain production is supported by the federal government.
And for this next question, Elaine, hoping maybe you can give our viewers some personal insight into how you've approached things this year. Remind us of your acreage and the operation that you have in South Dakota. Has what we've seen in 2020 changed your approach to marketing and risk management at all?
Yeah, risk management is a good topic for this. So I'm not a big farmer. I only farm a few hundred acres. And I did not have super yields this year, but I have, discovered, as people do, that real world agronomy is a lot like real world economics. You can't necessarily control the variables and really know why. It could have been spotty rains, could have just been the kind of soil I'm dealing with, but I didn't get as good of yields as some of my neighbors even. So the diversification is a risk strategy that I think a lot of people could bring in, and I wish I would if I had more acres. But you can prove that financially, if you have a multiple basket of assets, you can lower your risk because not everything is going to go wrong. And you can do that agronomically too, right? You can listen to all the smart people in Market Journal, the agronomists that you interview, and all of the different production practices that you could incorporate in. And that would be a risk management strategy, is to just geographically diversify, production practices diversify. That's really my takeaway from 2021, is to try new things.
And Elaine, we're still a few weeks out, but never too early to talk about the big annual crop report coming out on January 12th. Any guesses as to what we could see here?
Well, the January report does sometimes tend to be a market mover. Those can be volatile market days. The only thing that I would really be willing to stick my neck out at this point and think that we might have enough evidence for the USDA to push this would be higher export numbers for wheat, corn, and soybeans. But with soybeans, it gets really tricky because those ending stocks are already so low on that table. You've got a stocks to use ratio of 4%, which is extremely bullish. We know that that supply and demand situation is going to remain tight, at least for the next month or so, six weeks, going into February when you've got the South American supplies coming online.